If you work for yourself as a freelancer, independent contractor, rideshare driver, or small business owner, you already know how frustrating traditional financial systems can be. The moment an unexpected emergency hits, whether it is an urgent car repair, an expensive medical bill, or a sudden gap between client payouts, finding short-term cash feels like jumping through endless hoops. When you go to a traditional lender or bank, the very first thing they ask for is a standard employer pay stub or a W-2 form. If you do not have a traditional boss signing your paycheck, you are often met with immediate skepticism, mountains of extra paperwork, or outright rejections. This creates a genuine sense of anxiety for self-employed individuals. You might wonder how you are supposed to manage an unexpected financial bump when your income ebbs and flows throughout the month. Worse yet, many gig workers and freelancers fear turning to traditional payday loans or high-interest cash advances that demand immediate lump sum repayments, which can easily trap you in a dangerous cycle of debt. This brings us to the core question: can self-employed people actually use possible finance to get a short-term loan, or is it strictly reserved for traditional W-2 employees? The short answer is yes. Self-employed individuals, 1099 contractors, and gig economy workers can absolutely use possible finance. Possible finance does not require W-2 pay stubs, nor do they run a hard FICO credit check to determine your initial eligibility. Instead of relying on traditional employment verification, possible finance uses cash flow underwriting. When you apply through their mobile app, you securely link your primary checking account using Plaid. The platform's algorithm analyzes your real-world banking activity, evaluating your incoming cash flow and spending habits to decide whether you qualify for an installment loan. However, simply being self-employed does not mean automatic approval. Because possible finance relies entirely on your banking activity, there are specific guidelines you must meet as an independent worker. First, you need to show at least $750 in consistent monthly income deposited into your linked checking account. Second, the algorithm looks for at least 3 consecutive months of regular deposit history. These deposits do not need to come from a single employer. They can come from gig platforms like Uber, DoorDash, Upwork, or Stripe, as well as direct client ACH transfers. Beyond total income, the overall health of your checking account is critical. Possible finance reviews your account balance history, looking for consistent positive balances and minimal instances of overdrafts, returned checks, or non-sufficient funds fees. If your account frequently dips into negative numbers or shows multiple active loans from other short-term apps, your application may be turned down. Additionally, you must reside in an eligible state where possible finance operates, hold a valid state-issued photo ID, and maintain a primary checking account held in your legal name. For self-employed people navigating variable income, possible finance offers a couple of distinct advantages over standard payday products. Rather than forcing you to repay your loan in one massive lump sum on your next payday, possible finance splits your repayment into 4 manageable installment payments. If a client is late paying an invoice or your gig earnings fall short one week, the app allows you to reschedule payment dates up to 29 days from the original schedule without penalty fees. Furthermore, possible finance reports your on-time installment payments to major credit bureaus, giving self-employed individuals a practical way to build or repair their credit history while managing short-term cash flow needs. At the same time, it is important to weigh the potential downsides. Possible finance is designed for temporary cash flow crunches, not long-term business capital. Initial loan limits are capped, typically starting between $50 and $500. Additionally, while there are no hidden late fees, borrowing costs vary by state and carry higher finance charges than traditional bank loans. If you are a self-employed worker considering possible finance, here is your actionable takeaway to maximize your approval chances. Consolidate all your gig earnings, client payments, and 1099 income into one primary checking account rather than splitting them across multiple bank accounts. Keep that account active and positive for at least 90 days before applying. Ensure your monthly deposits easily surpass $750 and resolve any negative balances or overdraft fees prior to submitting your application. By maintaining a steady, organized cash flow in your main bank account, you can effectively leverage possible finance as a safety net when unexpected expenses arise.